Tax revenuers love to tax dead people. In this episode, I'm going to address Biden tax plan, 50% higher taxes for people who are 6 feet under. Get ready. You are going to learn something that maybe you were not aware of, and I'm going to show you what you can do to protect yourself and also your parents or grandparents. So what am I talking about? You know, President Joe Biden, he has a lot of initiatives that are going to require a ton of additional tax revenue. A lot of these are so expensive that he has got to grab for all kinds of straws because they are going to require that the IRS collects 3 times the taxes that they've been used to collecting. So where is the money going to come from? One of them is the estate tax. Now, in summary, I'm going to share with you the history of estate tax, but what do I know? Well, I'm Doug Andrew, and I have been a financial and tax strategist for more than 45 years, and I have trained a lot of CPAs and tax attorneys on the best way to avoid unnecessary income tax, but also estate tax. So let me share with you what the estate tax is. Oftentimes it's referred to as the inheritance tax because when you have, let's say, a couple, normally if you have one of them pass away first, which oftentimes might be the man, okay? Let's say the husband passes away first. Everything the husband owns usually passes to the wife with joint tenancy or in a trust, and there is no estate tax. In other words, the spouse gets to receive the inheritance from the spouse with no estate tax. But as soon as the second one of them pass away, and it's going to go down to the children or grandchildren or what we call heirs, that's what triggers an inheritance tax. Now, we have found in history tax revenuers, those who love to collect tax and promote all kinds of additional government programs, they love this tax. Why? Because the people that they're taxing are 6 feet under. They can't complain. Their kids might complain, but generally the kids are like, whatever, when do I get my share after taxes are taken care of? But see, the people that are actually getting hurt are the ones who are already dead. And so government loves to take advantage of taxing when money is transferred. In this case, it's being transferred down to non-spousal heirs. So that's the estate tax or the inheritance tax. Now, it used to be back in the 1980s, 1990s, up until about the late 1990s, that there was no estate tax unless the value of everything that you left behind, and this included your clothing and everything, I think was called a 706 form, 9 months after the second one of your parents passed away. The children had to do that. Well, you didn't have to pay an estate tax unless it was more than $600,000. And back then, you know, a lot of people didn't have $600,000 of value in their estate. But everything over that, the beginning estate tax rate was 37%, and it topped out at 55% if you were worth a few $1 million. Now, because of inflation and because of the cost of living, more and more people have estates worth $1 million, $2 million, $5 million, and so forth. And so they began to raise it. It was up to $1 million, and then it was going to be added again. And so basically, long story short, as the recording of this video, because of the Trump tax cuts, the estate tax exclusion is over $10 million. So only assets that are worth in an estate over $10 million are subject to an estate tax. And it could be in the mid 40% range. But now that Joe Biden needs more money, he is looking at doing 2 things. He wants to take the mid 40%, let's say 46% rate, and increase it by 50%, up to like 76%. Biden wants to take the mid-tax range of around 46% and increase it about 50% up to 67%. In other words, he goes, hey, they're 6 feet under. Let's take 2/3 of everything over a certain amount, and let's just take 2/3 of it and put it into the government coffers and redistribute this wealth. Well, that's called the estate tax. What is a second option? To lower the exemption amount from 10 million, maybe down to 5 million, or maybe down to the original 1 million. I don't know. When they get greedy, this is what they do. In fact, when Hillary Clinton was running, she wanted to alter the estate tax to fund some of her initiatives. So when you have a tax revenuers, this is one of the areas where they love to tax people as money passes down from parents down to the next generation to the heirs. That's called the estate tax. Now, what I do in a lot of my books is teach people how to avoid unnecessary estate tax and what you can do better. You want to hear a few tips? So if you have parents that are getting up in age, or you know somebody in this situation, and they ought to watch this, share, make a comment, subscribe, push like. And if you do subscribe, click the little bell and be notified every time I post a new in-depth answer to a financial question like this on Three-Dimensional Wealth as my channel. So what I often would tell people to do is, okay, you ought to set up a trust if you have assets, especially worth over these amounts, or if your assets will grow in value. A lot of times people don't realize how fast their estate grows in value. If it's appreciating it at 7%, it's going to double every 10 years. If it's 10%, it's going to double every 7 years. So you want to do preemptive measures. When you set up a trust, then basically a sharp attorney will take half of the trust assets and put it in maybe under the husband's and the other half under the wife's. You still own it all, but by doing that, each of you then gets up to that exemption amount. So let's say if it's $1 million or 5 million or 10 million, that just doubled it. You each get 5 million or you each get 10 million exemption. Does that make sense? So you can have twice the amount of exemptions when you set up a trust and divide the assets into two different trusts. It also helps for other things like liability protection if you got sued. The most somebody could sue you for is half of what you have in your trust if you're the one that owned the car that was in the accident or something. That's another topic, and you can search this channel for the merits and advantages of trusts. Coming back to the estate tax, when you want to protect yourself, you can also switch a lot of your assets over into something that's going to be income tax free, and you can also have it be estate tax free. My favorite vehicle where I put my serious cash, and I've advised thousands of clients to do this, is what I call the Laser Fund. It's a max-funded, indexed, universal life insurance contract that's primarily designed for living benefits, where you can earn 8% and net 7, you can earn 11% and net 10, so that every million, if you needed income, can generate 70, 80, 100,000 a year of tax-free income into perpetuity. But when you finally die, that million that I was just talking about will blossom to 2.5 million and transfer totally income tax free. But if that's going to cause your estate to go higher and subject yourself to the estate tax, you put that over in what is called an ILIT, Irrevocable Life Insurance Trust, and it's not included in the estate because it's already then owned by the children. This is a very powerful strategy if Joe Biden lowers the exemption amount. If he doesn't, I would recommend that you at least get a trust set up and save yourself unnecessary income tax by using the Laser Fund. And then by using the insurance contracts, it's the only way that when you pass away, it blossoms in value, that heaven forbid, if you do, or your children or grandchildren do owe an estate tax, why inherit a bunch of buildings or property and then have to sell them to pay 67% to the government? Because it's due in 9 months. If you want to avoid that, then take some of the assets, leverage them, even borrow, put it into the insurance policy, and the insurance policy pays out 3 weeks after somebody passes away, and now you're paying Uncle Sam 67%, if that's what it's going to be, not with the asset, but by leveraging, and it's paid by the life insurance, and you get to keep the buildings. You get to keep the assets instead of having to sell them to pay the tax bill to Uncle Sam. That's why I recorded this. It's so critical because Biden plans on taking this estate tax up 50% because they love to tax people who are 6 feet under. They're not there to complain about it, but I wanted to make sure you knew about it before it's too late. So what should you be doing, and how can you learn more and share it with maybe your parents or grandparents? So the best way for you to learn and then be able to share or be able to point your parents or grandparents to information is to have them be able to resource it in my most recent best-selling book, The Laser Fund. Now, the Laser Fund is a max-funded index universal life insurance contract that is designed to be used for living benefits. Like I mentioned, many people will accumulate money or transfer some of their assets into here. If you own real estate properties, a lot of people will take the equity from those and put it into here to leverage. A lot of times people don't want to be a landlord anymore. They sell the properties and they go, where should we put the money? They put it here and it generates as much or more income as the rental income from the properties. And they go, wow, where have you been? Well, see, they have their blinders on thinking that real estate was the cat's meow. So people get shocked with how well this performs, but not only for retirement planning, but estate planning. See, every million in here, that if I died tomorrow, I'm 68 and a half right now, that would blossom to about 2.5 million and transfer tax free. And so I can keep that totally out of my estate if I want, if that caused me to go over these limits. This is very powerful information. I want to gift this to you. It's 300 pages. It retails for $20, but I will pay for the book. You simply go to laserfund, L-A-S-E-R, fund.com, and contribute a nominal amount toward the shipping and handling. I'll cover the rest of that, and I'll fire out a copy of the book for you. You indulge and share this with others who need this information to protect themselves from unnecessary estate or inheritance tax.